Hello. So today I will talk you through a data-driven analysis of Netflix's most dramatic corporate crisis in recent history. In April 2022, Netflix reported losing 200,000 paid subscribers in quarter one, its first decline in over a decade, and the stock fell 35% in a single day, erasing more than $50 billion in market value. My role as a data analyst at Netflix is to explain why this happened and what the data tells us to do about it. I will cover four areas: business challenges and problem formulation, the data sets I sourced, the EDA, and six actionable recommendations. So first, about the business understanding. So based on the CNBC article from April 2022, I identified five interconnected challenges. First one is the subscriber loss and guidance shock. So Netflix lost 200,000 subscribers in Q1 2022, the first decline since 2011, then guided for a further loss of 2 million in Q2, when analysts had expected a gain of 2.73 million. And second is the revenue miss. So Q1 revenue of $7.87 billion fell short of the 7.93 billion consensus, compressing investor confidence. And third one is the password sharing scale. So over 100 million households worldwide, including 30 million in the US and Canada, were accessing the platform without paying, the single largest untapped revenue opportunity. And fourth is the intensified competition. So Disney Plus, HBO Max, Apple TV Plus, and Paramount Plus all launched between 2019 and 2021, each cheaper than Netflix and several with ad-supported tiers. And final is the post-COVID demand normalization. Netflix added 36.6 million subscribers during 2020 lockdowns, pulling forward years of growth. As life normalized, that tailwind became a headwind. And then about the business problem statement, which combination of content strategy, regional market maturity, and subscriber behavior factors best explain Netflix's Q1 2022 subscriber decline, and what data-supported actions can reverse the trend. So the target variable is quarterly net paid subscriber additions. Key stakeholders are the CEO, the Chief Content Officer, the CFO, and the regional GMs across APAC, LATAM, and EMEA. And let's move on to the data sourcing and justification. So I sourced four complementary data sets covering Netflix's content library, financial history, stock performance, and the competitive landscape. So the first data set you can see here is the Netflix titles catalog. So 8,807 titles with 12 variables, including type, country, release year, genre, rating, and date added. It represents the catalog as of mid-2021, a direct pre-crisis snapshot, making it ideal for analyzing what Netflix was offering subscribers at the exact moment the decline began: genre mix, content refreshness, and geographic origin. And the second data set is the Netflix quarterly financials. So because of the time, let me just skip through these four data sets. And the third one is the NFLX stock price, and the final one is the streaming competitor benchmarks. Now let's move on to data cleaning and pre-processing. So for catalog, director, cast, and country had up to 30% missing values. Rather than dropping these rows, which would have biased analysis against international content, I filled text fields with unknown. And for feature engineering, I extracted numeric runtime in minutes for movies, season counts for TV shows, and created a primary genre and primary country for their multi-value fields. And finally, for quarterly and stock data from financials, I derived a year-over-year revenue and subscriber growth rates and operating margin percentage. Stock data from Y Finance had no missing values, and I added 30 and 90-day moving averages plus a daily return column. So that's what I did in this part. And next part is about the EDA and some key findings. So the figure one shows the subscriber trend and net adds. So you can see from here. So COVID-19 added 36.6 million subscribers in 2020. Immediately after, net additions collapsed to near zero through all of 2021. By Q1 2022, the bar crosses zero for the first time in 20 quarters. And crucially, the slowdown was already visible 4 quarters earlier in Q1 2021, confirming this is structural market saturation, not a 1 quarter shock. And you can see from here. And 4.2. So this is about the revenue subscriber growth decoupling. So revenue grows faster than subscribers because of price increases, the purple ARPU gap. And in Q1 2022, subscriber growth goes negative, while revenue growth remains positive at around 10%. So the key takeaway here is Netflix can still grow revenue through price, but this strategy has limits if churn accelerates. And third one is about the NFLX stock price crash. So NFLX peaked at $691 in November 2021. And April 2022 earnings reaction was a single day fall of approximately 35%. So peak to true, the stock declined over 75%, and the market's verdict on the structural severity of this crisis. And 4.4 is about the content library profile. So you can see from here. Wait, okay. So the US accounts for 35% of all titles. India and UK are distant second and third. So for LATAM and EMEA subscribers, the two regions that contracted in Q1 2022, a US heavy library directly increases churn risk. And in 4.5 is the content addition timeline. So titles added per year peaked in 2019 and collapsed in 2020 due to production shutdowns, which you can see from here. And due to the time limit, I will not be introducing the following graph. I'll just show you these in my code. So I also did something including ratings and library refreshness in 4.6 and 4.7. And in 4.8, I did the competitive landscape. And 4.9 is the operating margin. And in 4.10, 4.11, and 4.12, I did some genre trends and some financial correlations. And you can also see here the correlation matrix. Okay, so some key findings are, first of all, in conclusion, Netflix's Q1 2022 crisis resulted from our 4 converging forces: pandemic era demand saturation, well-founded new competitors, an uncompetitive pricing structure, and finally 100 million non-paying households. So the data shows the underlying business remained fundamentally healthy. Revenue was growing, margins were solid, and APAC was expanding. This was a strategic inflection point, not a terminal decline. And the data-driven path forward is clear. Monetize password sharing, launch an affordable ad-supported tier, and deepen local language content investment in under-penetrated markets. Netflix has executed on all 3 since 2022 and returned to subscriber growth. So that is the power of letting the data lead all the decisions. And that's it for my project. Thank you. And you can see the final part of my code. And here's some key actionable business insights. Okay, thank you.